Good morning and welcome to the Australian Stock Reports online morning update for the 24th of November 2011. Europe's fiscal mess triggered another punishing sell-off on global markets overnight, with the rout extending to all but the safest of assets. The European debt crisis took a sinister turn after a German bond auction failed to attract sufficient investor interest, causing a spike in the cost of insuring European government debt. Germany's bonds are considered among the safest debt investments, and last night's lack of a demand is a sign that even it is not safe from the contagion effect of the crisis. The bearish mood was compounded by US economic data showing a weaker than expected rise in both weekly jobless claims and consumer sentiment. The ream of bad news led panic-stricken investors to the safety of US treasuries, which widened their gap over German bunds despite America's relatively higher levels of debt. As the table shows, it was a bloodbath everywhere, with the US indices capitulating in the final moments of the session as traders took to the sidelines ahead of the Thanksgiving Day holiday. Concerns over the macro picture also weighed heavily on the commodities, with oil and copper losing more than 1% each. Risk aversion fueled yet more gains in the US dollar, whilst the euro fell sharply due to the failed German bond auction. Our dollar slumped to just 97 US cents amid concerns slowing Chinese manufacturing activity will lead to more weakness in commodity prices. The SPY halted its declines at the onset of the European session, managing to briefly move towards the 40.80 region. From there, however, it was all downhill for the index, which slid almost 50 points to currently be trading around 40.35. The Aussie market appears set for another negative start to the trading day, with futures currently pointing to a 25-point loss on the open.
Get free access to our daily reports and recommendations now. Visit australianstockreport.com.au/try.